Merry Christmas, everyone, and welcome back to RoxomTV. I'm your host, Jamie, and today we're diving into the world of finance and Bitcoin. Well, as of today, Asia opened the market strong, with some of the AI stocks leading the way. There are two China AI IPOs in Hong Kong exploded. Song Health pumped more than 134% on the day, with New Bing Ken AI technology pumped more than 300% on the day. Meanwhile, Bitcoin is struggling because there is another rise of those quantum computer threats. So the today's show, we're going to dive into the topic whether quantum computer is a real threat to Bitcoin or is just another nothing burger. We're also going to dive into Robotaxi in the UK because Chinese robotaxis companies, they are getting into the UK market, to the British market, and really competing with the American brands out there. So does China has a stance when it comes to robotaxi and when it comes to EV, electronic vehicles? We're also going to look into Netflix and possibly the deal of purchasing Warner Brothers is on the brink of not going through. The reason why is that there is another hostile takeover by another company. So we're going to look into that. So many news to get in, but first of all, as always, we always like to start with a little bit of Bitcoin analysis and charts analysis. So without further ado, Bitcoin right now is trading at $87,000. We are starting with the daily chart and slowly building up the time frame to weekly. So right now, Bitcoin is at the major resistance yet again. This is a downward movement that we've been building ever since 6th of October this year. So we have been building that for even close to 3 months. So whenever Bitcoin gets close to the resistance, we end up getting rejected. So I won't be surprised if this time we'll get rejected at 90K level yet again, and then we're gonna dump to an even lower price for Bitcoin's price action. Well, one thing I find it really interesting is that when I was going through all the comments, and yes, I do read all the comments on both Roxom TV and on GemGem Crypto. So when I was going through all the comments, people are saying that Bitcoin, there's a chance of going to 100K, and I absolutely agree to that. But from a technical standpoint, anything below 108K, we are still in a bear market, and this is why I'm one of the earliest analysts out there to call this to call a bear market early. And of course, that wasn't a popular opinion after all. But from a technical standpoint, 108K is a critical level I'm watching because it was the previous all-time high, even back all the way in December 2024, and then we tested this 108K as resistance back in January 2025 as well. So ever since that, it's kind of like at a mid-range, mid-level, and also we use that as a support. So price resistance is going to be our support. That's what we've seen back in October 2025. And at the same time, prior all-time high is also going to be our future resistance. And Bitcoin right now, we are sitting at 87K, so there is still a 22% to a 22% pump in order to just to reach 108K. So from a technical standpoint, anything below this level of 108K, we are in a bear market. So there's no argument there. However, that being said, if you guys like to trade the market, and remember when you're trading, trend is your friend. And I won't be surprised that, okay, to get in at maybe 100K, or I'm eyeing very closely at this key resistance level because we are trading below that for 3 months. So this is a level that I won't be surprised when we get close and we get rejected again. So In the coming days, I'll see very closely how Bitcoin will react, and because this is the holiday period, so being a holiday season, that means the trading volume is usually lower. People don't trade as closely as on weekdays because they want to spend time with the family and they're not staring at their monitor every single second. So during the holiday period, I do expect that the volume is going to drop. However, for the daily candle, if we manage to close above that, because for close to 3 months, we didn't manage to close above this. And if we have a candle actually closing above this downward momentum, this is a first bullish sign that I'm eyeing.
Red line at the bottom beautifully as a support line, and we used that at 80k as support. That was back in 17th of November, so that weekly candle. So I won't be surprised we'll be trading inside. In other words, we could pump all the way to 104k in the coming days or in the coming weeks, even, because we are looking at the weekly candle. The reason why I have this thesis on is because if we zoom out and look at the previous bear market we were in, we were essentially trading inside this Ichimoku cloud for 3 months, so little over than 3 months. So in other words, we're going to consolidate. There will be pump, because even in a bear market, okay, people find my statement a little bit contradicting, because even if in a bear market, it's not a straight staircase down to hell. We're still going to see rally like this, but overall, if we zoom out, it's still going to be a downtrend, and this is what you call a bear market. Vice versa, even for a bull market, it's not a staircase to the heaven. We're still going to see pullbacks like this, and buying dips in a bull market is basically how you make the quick profit and how you flip for a quick buck. So I just want to get it out there because I saw some really negative comments about the trading style that I have. I just want to say, okay, it depends on if you're short-term trading or mid-term trading or long-term trading, because there is different mentality and different tricks you can use. So anyways, in the coming weeks, like since we have only been trading inside the Ichimoku cloud for right now 42 days, like roughly 6 weeks, like based on the pattern that we've seen from the past cycle, maybe we're gonna spend another few weeks time inside this Ichimoku cloud before completely losing the span B as support and go to a lower places and perhaps even to 60k. The reason why I will say this, because Ichimoku cloud is flashing a bearish signal. Again, that being said, it doesn't mean you can't trade during cycles like this. There's always opportunities when it comes to trading, and don't like trade against the trend. And right now, since the Ichimoku cloud is going up, and we know history doesn't repeat, but it often rhymes. So there's a reference we could look at. So in the coming weeks, there might be pumps like this. And if you guys haven't de-risk a little bit, it might be a perfect opportunity for you to de-risk. So point being, the bearish sign number one is the Ichimoku cloud, span B trying to take over span A. This is one. And as for how low we could go, we need to pull up the 200-week moving average. So being the red line at the bottom, the red line is sitting at $57,000. And of course, we're not going to, again, as I say, even in a bear market, it's not a staircase straight to hell. We're still going to see pump like this before actually finding a cycle bottom. And if this 200 weeks slowly catch on, the reason why, because it is a moving average and it smooths out all the price action to make the whole price volatility less crazy. That's what it does, and especially when we're looking at the much higher time frame, being the 200-week moving average. So if this slightly catch up, maybe we're going to see a cycle bottom around 60K. But this is just a reference we could be looking at. Again, since this is a weekly mindset, so do adjust your trading strategy. And again, I'm not a financial advisor. I don't know about your situation. And when it comes to trading, your entry point, your mark price, and your exit price, it changes the whole story. So this is, since we are only doing this every single day, Monday to Friday, I'm not monitoring your portfolio every second. So doing shows like this, it helps you to inform you what's going on in the market. But trading, everything, it depends on your whole entry and exit point. And I just want to get it out there so that we are on the same page. All right, so that's for the Bitcoin quick market updates. And I do want to move on to Asia a little bit more today, because like Asia markets opened higher on Tuesday, being today, following a strong night on Wall Street. The big theme again is, of course, AI stocks leading the rally. This move continues the rebound we already saw on yesterday, the 22nd of December, when Asian markets jump after good US economic data and a comeback in major tech names. So far, if we scroll and take a look at the market performance, Australia, so ASX 200, it pumped 1.1%, and that is like the fourth day of gains. And whereas Japan, the Nikkei, the price change is 0.02%, is mild, but again, this is the second day of Asia's pumping. So as South Korea, we actually have a little a 0.28% change. And so as Hong Kong Hang Seng Index, Hong Kong Index is right now recovering a little bit, actually correcting a little bit, so 0.11%. And a day earlier, the Japan Nikkei actually jumped 2%. So as Hong Kong and Shanghai, Seoul, Singapore, Sydney, Taiwan, everything, all the Asian markets are in green. So why the markets climb so much in Asian, especially in Asia, the lift came from AI hype and strong moves from US tech. So if we take a look at Nvidia on the past 5 day price action, is doing really well. It's a basically an up only charge right now, is sitting at $183. And if we also look at Micron for the past 5 days is doing a really well gain, so 4% gain, right now sitting at $278. And when it comes to Oracle, which is another AI giant, right now on the past 5 day, we are sitting at $198 currently, with a 3.34% pump. In Asia, the gain is even crazier because there are two China AI IPOs in Hong Kong, and they absolutely exploded. The first one being Chingsong Health, they pumped 134%. The second one is New Ken, and is an AI technology company, and they pumped 323%. And not only this, a few macro factors helped the rally too. First of all, we have the US inflation cooling down, raising hopes for the Fed rate cuts in 2026. At the same time, US unemployment rate is rising, is at a 4-year high. So there's more reasons to justify for those rate cuts from the Fed. Markets also watched for Singapore's inflation report because it's expected to be the highest this year. Investor mood turned quite positive, especially this past few days, after Micron's results calm earlier fears about AI overvaluation. It is truly interesting to see how quickly narrative changes in the market, because only a week ago, markets saw a big AI-led sell-off. Oracle fell 2.6%, CoreWeave fell 8%, and many AI stocks were 40 to 60% below their highs. This was mainly caused by high debt levels in AI companies, concerns that valuations were getting too high, and investors were rotating into old economy sectors like materials and banks. Maybe this is the reason why we have seen gold and silver keep breaking new all-time high. Some analysts call this a healthy slowdown, not a crash, like slowly letting air out of the bubble instead of bursting it. And as for today's move, today's rebound, it was mainly due to the cool down of the AI fear and the help from the U.S. economic data. But this is not this does not mean volatility is over. The AI story is still very sensitive to news. So the question investors are asking is AI still in a bubble? Well, there are signs of AI in a bubble for sure. For example, stock prices rising too fast and companies are taking on huge debt. And not to mention, most of the AI companies we are seeing today are not making any revenue. Nvidia and other interesting setup, they would invest in startups, then the startup would buy Nvidia chips. So there's a secular deals going on. So frothy, maybe bubbly, not sure yet. But there's still signs that AI might not be in a bubble. For example, there is real demand for AI, and especially when the entire US GDP kind of depend on it. And big tech is still very profitable. Maybe not AI startup like OpenAI, but if we look at big tech like Google or Amazon, they are still making a lot of money, and valuation still significantly lower compared to the dot-com era. So most analysts are saying AI is overheated, but not clearly a bubble, at least not yet. Of course, we only know this in hindsight. But why does this matter to investors? First of all, there are opportunities in Asia. There is huge IPO pop in Hong Kong. What it shows is that it dictates a strong appetite. Rate cuts could add more fee to it, and as we know, whoever replaced Jerome Powell, he's going to cut rates significantly. And for this week, this price action, what it dictates again when the US sneezed, because last week US AI stocks was correcting a little bit, Asia took a much bigger hit. So Asia actually caught the cold. So when it comes to investing, diversification is key and just don't go all in on AI. All right, so this is the quick Asia update from my side. Before we dive into the next big topic, being quantum computer threat to AI, let's take a 3-minute break and I'll see you guys in a bit.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
The AI rebound, another piece of technology is quietly raising a very different kind of question for investors tonight. So, quantum computing, not about stock prices, but about security, specifically the security of Bitcoin itself. There's a phrase going around, quantum panic over Bitcoin is premature, but the clock is still ticking. This basically means quantum computers can't break Bitcoin today, but one day they might, and we need to prepare early. Right now, quantum computing technology is improving fast, is nowhere near strong enough to crack Bitcoin's cryptography, but experts warn that Bitcoin upgrades could take years because Bitcoin is decentralized. You can't just press a button and update the system. So planning early is important to avoid chaos later. So where does quantum computing stand today? Quantum computing made big progress this year, but it's still in an early stage. For example, companies like Google, IBM, Atom Computing, they have achieved very high accuracy with the quantum gate, above 99.9%, which is important for future error correction. Stanford researchers achieve room temperature quantum, meaning quantum tech may eventually work without super cold environments. And when it comes to error corrections, the tools are improved significantly, so reducing failures caused by leakage qubit stakes. And when it comes to the money and adoption, global investment is expected to hit $8 billion in 2026. And IBM says quantum now makes up 11% of the R&D budgets compared to 7% in 2023. Many analysts expect a strong ROI by 2030, and quantum company stocks are up triple digits in 2025. However, there's still limits. Today, quantum computers are still very noisy and they are extremely small. We need millions of these stable error-corrected qubits to break Bitcoin. And at the time being, we are nowhere close to that today. And experts are saying progress is real, but predictions about useful quantum computing by 2028 or 2029, they are uncertain. So the bottom line is quantum computing is getting stronger, but it's not yet a threat to Bitcoin level cryptography. But quantum computing, actually, how is it placing threat to Bitcoin? Well, of course, one day it's going to be a massive threat. Bitcoin used the cryptography to protect private keys and sign transactions. A strong enough quantum computer running Shah's algorithm could derive private keys from public keys or even forge signatures, then steal the coins and attack the blockchain. So some estimates say 25% or more of Bitcoin supply could be at risk, especially old wallets that cannot be updated. In other words, the real danger is long-term when quantum hardware becomes large and stable enough. But however, there are arguments on both sides, of course. Many experts believe the risk is still far away. Quantum computers today are nowhere close to breaking Bitcoin, and Bitcoin developers have time to upgrade the system. And some developers argue that the threat is exaggerated and mostly used for headlines. This group of people usually believe that we should watch the progress, but there is no need for emergency action yet. Vice versa, if we look at the other side of the argument, Vitalik Buterin, he puts a 20% chance of quantum breaking crypto before 2030. Some analysts warn Bitcoin could fall below 50K by 2028 without upgrades, and some predictions say risk could appear in 2 to 3 years. Even Michael Saylor himself, he believes Bitcoin might need a hard fork to remove vulnerable coins, potentially cutting supply by 20%. And these are the group of people who believe preparation should start even right now. So Bitcoin is actually a lot easier to attack than traditional banks than centralized entities. And quantum actually doesn't just threaten crypto, it also threatens passwords and bank encryption or digital signatures. But Bitcoin is a special case because all the public keys are exposed on chain. Once you use your Bitcoin address, the public key becomes visible forever. A future quantum computer can attack it, not to mention because Bitcoin is really decentralized, it actually slows down upgrades, unlike banks can upgrade encryption in weeks. Bitcoin, however, requires global consensus from miners, from nodes, from exchanges and wallets, and that could take 5 to 10 years. And when it comes to Satoshi's coin and those lost wallets, they cannot be updated, like all stuck with old cryptography. And post-quantum signatures are larger, like bigger keys and signatures stress Bitcoin's limited block space. This is why Bitcoin needs more preparation than centralized exchanges or centralized systems like banks. So how Bitcoin and crypto can prepare so far? First, we do need post-quantum cryptography. So we need to publish a quantum safe standards, and many crypto projects already use these. And Bitcoin needs to upgrade to a quantum proof standard as well. However, this is the hardest part because it requires new signature schemes, even a hard fork or soft fork, migrating millions of users and moving coins that haven't moved in years. Not to mention, government and institutions are planning as well. SEC wants a quantum-proof financial framework by 2028. Companies like BTQ are building quantum secure networks. If we prepare, Bitcoin can evolve and become quantum resistant. However, if we don't prepare, future quantum breakthroughs could cause major market shocks. All right, so while the market is trying to figure out how quantum computing might reshape Bitcoin years from now, we also have another piece of tech news that we need to look at, and it's going to reshape something much more immediate and how people move around cities. Well, this shift isn't theoretical, it's happening right now and in one of the world's biggest financial hubs. After a week dominated by AI volatility, Asia's rebounds, and rising quantum headlines, London is suddenly becoming the next battleground for EV, autonomous vehicles. Let's move to UK right now, where Uber and Lyft are taking a major step into the future of transportation. Uber and Lyft have both announced separate partnerships with China's Baidu to launch autonomous robotaxi trails in London starting in 2026. This is one of the most significant expansions of Baidu Apollo Go driverless system into a Western market, and it positions London as a key global testbed for robotaxis. The move aligns with the UK government's push to become a leader in self-driving technology, with new laws and pilot programs designed for small-scale commercial services like autonomous taxi and buses. This also adds a new layer to the US and China tech rivalry, because for the first time, Chinese autonomous vehicles will be operating inside a major Western capital. So if we look at the background of the parties that are involved, of course, first we have Baidu. Baidu is a leading Chinese tech company and operator of Apollo Go, one of the world's largest robotaxi networks. It operates in 22 cities across China, plus Hong Kong and Dubai, the UAE and Switzerland. It delivers more than 250,000 driverless rides per week, and it has completed millions of unmanned rides globally. It competes with China players like WeRide and Pony.ai, both pushing for international expansion. Whereas Uber, of course, everyone is familiar with Uber. It has a long history working with Baidu in global markets, and they will integrate Baidu's autonomous LT6 vehicles into the Uber app in London. As for Lyft, they recently expanded into Europe with its $200 million acquisition of FreeNow, and will also operate Baidu Robotaxis in the UK. So as for how the trial's going to work, both Uber and Lyft will use Baidu's Apollo Go LT6 vehicles, so fully electric, fully autonomous, and designed specifically for ride-hailing. The key details we know so far is that they're going to launch in spring or first half of 2026, starting with dozens of vehicles, scaling to hundreds. London is the first testing ground, with expansion possible if successful. This is also the first time US and Chinese robotaxi tech will compete in a European capital. Lyft says the hybrid human AV model will help handle peak hours and airport runs and early morning commutes. The trials still require approvals from Transport for London, local councils, and the government's National AV Safety Framework. The UK expects 38,000 new jobs from the sector and aims to have small-scale autonomous operations running by spring 2026. So this news fits into a global, worldwide surge in autonomous ride-hailing. Companies like Baidu or Waymo or WeRide are still losing money, but they are expanding aggressively because the technology is seen as a future-defining industry. Social media has been buzzing, especially with posts tagging Uber or Lyft or Baidu, and comparing this to the US-China tech rivalry moving into transportation. So while London is preparing for a future where your next ride might show with no driver at all, the media world is dealing with a completely different kind of disruption, one that could reshape Hollywood and streaming or even global entertainment power dynamics. Because as robotaxis begin rolling out in the UK, Netflix has quietly pulled the trigger on one of the biggest studio deals in modern history. This is the kind of move that doesn't just shift technology, it rewrites the entire media landscape. Netflix has announced a historic acquisition of key entertainment assets from Warner Brothers Discovery, including Warner Brothers films and TV studios and major content libraries like Harry Potter and Game of Thrones. This is not a full takeover of all Warner Brothers Discovery business. Warner Brothers Discovery is spinning off its declining cable channels like CNN and Discovery, etc., into a separate publicly traded company. Netflix is buying the growth asset, not the legacy ones. The deal is valued at roughly $72 billion to $83 billion, depending on how that is counted, making it one of the largest media mergers ever attempted. So how the deal is structured, the details are Netflix going to offer a cash and stock package worth roughly $32 per Warner Brothers share, including a $4 per share equity stock tied to the spin-off company. Netflix secured a $59 billion bridge loan to finance the purchase, and after closing, Netflix would control Warner Brothers, HBO Max, and the content library. And as for the spin-off company, still holds the declining cable businesses. The deal is scheduled to close after Warner Brothers Discovery completes its network separation, meaning late 2026 if regulators approve. Analysts believe the issues are manageable, so antitrust issues are manageable, since even combined, Netflix with HBO Max would only hold about 25 to 30% of the US streaming market, which is still behind Disney globally. So why is Netflix doing this? Netflix is entering a new phase. Subscriber growth is slowing down, competition is rising, and content costs keep climbing. Buying Warner Brothers makes sense to Netflix because it gives a massive IP and a steady film and TV pipeline, and it controls over some of the world's best-known franchises. As for Warner Brothers, this deal helps to basically pay down more than $40 billion in debt, and it escaped the losing battle in the streaming wars. So this spin-off strategy was first hinted in mid-2025. However, things changed really quickly if we hop on to Polymarket. Polymarket is saying that we have seen a massive drop from 80% chance of Netflix closing this deal to only 60%. So why the sudden drop? Because Paramount Global submitted a competing hostile takeover bid for the same Warner Brother digital discovery assets. And Ellison himself personally guaranteed a $40 billion in financing. Paramount argues that Warner Brothers' $4 per share equity stub is overvalued. They say is $2 is fair, and they are willing to raise their bid by up to 10%, and they will cover any breakup fee if Netflix deal collapse. And if we hop onto Polymarket right now, who will close Warner Brothers acquisitions. Right now, Netflix is still the darling, so Netflix is sitting at 60% chance, while Paramount is sitting at 32%. However, there are things that could derail it. For example, Paramount raising its bid, or regulators pushback, or maybe Netflix being unwilling to sweeten its offer. For now, we're watching a 2-year takeover between Silicon Valley's own Netflix and the old Hollywood backed by Ellison. And so while Netflix is trying to reshape Hollywood with one of the largest studio acquisitions we've seen in years, another company is making moves of its own, not in entertainment, but in the world of corporate Bitcoin strategy. Because as the media world consolidates, MicroStrategy, the company most tied to Bitcoin's public market narrative, just executed a major liquidity move. And it's not about buying more Bitcoin this time. It's about survival, stability, and sending a message to investors. MSTL announced it increased its USD reserve by $747 million, bringing total liquidity to over $2 billion. In other words, what they are trying to do is fortify the castle without dumping BTC. So question, how did MicroStrategy raise millions of dollars? Turns out the money came from ATM offering, allowing the company to drip shares directly into the market. So between 15th to 21st of December, MicroStrategy, what they've done is that they sold more than 4 million Class A shares and raised $747 million in debt with no issuance of preferred stocks. This is part of a much larger authorization. The company still has over $41 billion in potential issuance capital across equity instruments. So the context, what we need to know is that over the past 3 weeks, MicroStrategy has raised nearly $4 billion through ATM sales. The previous 2 weeks saw almost all proceeds used to buy more than 10,000 BTC on the balance sheet. And this week, they raised big money, but not to buy Bitcoin. It's a notable pause. But this pause is the key in the headline. They raised cash, but didn't buy Bitcoin. So why MicroStrategy increased its USD reserve? Everyone is asking. MicroStrategy officially create its USD reserve on 1st of December, starting with $1.4 billion. And right now, they have almost double the money. This money mainly acts as a defense cash buffer for volatility, especially with Bitcoin's price or MSTR stock price volatility or global liquidity conditions. And as for today, MSTR stock is mainly flat, sitting at around 160 bucks, something like that. Well, 164 dollars. But the risk of MSCI delisting remains. So the bottom line is MicroStrategy did not slow down because they lost conviction. They slow down because they need some breathing room for the next chapter. And this exactly is a perfect segue for my next segment of the show to really understand where Bitcoin policy or regulation or adoption are heading to, and especially in the UK, because we talk about the British market a little bit. We are bringing on someone who works on the front lines of this conversation. So Susie Watt, the CEO of Bitcoin Policy UK and the host at our London Roxom studio. We are going to take a quick 3-minute break, and when we come back, Susie will join us live to break it all down. So stay tuned and you won't want to miss this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
To really understand what Bitcoin policy, regulation, and adoption are heading, especially in the UK, we are bringing on someone who works on the front lines of that conversation. So Susie Watt, she is the CEO of Bitcoin Policy UK, where she works directly with policymakers to push for clearer and fairer Bitcoin regulation. And she is one of our own, hosting from the London Roxom studio with her own show, My Two Sacks. So please welcome Susie Ward, a leading voice in Bitcoin advocacy and one of the sharpest communicators in the space. Susie, how are you feeling today?
Very well, thank you. Just checking, can you hear me?
I can hear you
Can you hear
perfectly
me?
well.
Amazing, we got there. Yeah, thank you for that lovely
Yes, but there's
introduction.
like
That
this
was
huge delay. So there's like 5 seconds delay. I'm kind of like guessing if there's like a pause, but like please bear with us. But since this is your first time on my show, and it was very fortunate to actually meet you in person because I have been watching a lot of your shows on RoxomTV. So why don't we start with a little bit of career journey? Like I was going through your background, and you went from accounting and finance to becoming a Bitcoin journalist. Like, I wonder what is that journey? How's that working out for you? And what's the turning point for you?
Good question. I think my whole career has been an evolution leading up to Bitcoin. And I know this sounds insane, but everything does make sense backwards. So I started my career as well, actually, I started in McDonald's, which I think all good Bitcoiners should probably have a job in McDonald's at some point. But I then became a secretary, an accountant. I then led on to systems accountancy and then became a developer. So every single stage along the journey felt like a natural progression towards Bitcoin. And I started learning about Bitcoin in 2020. It was just a curiosity thing. I wanted to know how it worked. I was wondering, how do you download this? How do you use it? It's a completely different type of money. And being interested in finance, it made sense for me to want to learn more about it. So I wanted to buy some Dogecoin and some XRP and kind of figure out how this whole cryptocurrency malarkey worked because it was completely alien to me. Downloading wallets, exchanges, how you buy it, what it is it money? Just trying to understand all of those um, little nuances and why it was completely different. And so I bought some Bitcoin. Tiny amount, £70 I think it was, and I split it between £35 of XRP and £35 of Doge. I don't have it anymore. I am no longer a shitcoiner, but I did go through a hardcore shitcoining phase, no doubt about it. But fortunately, I think that was also part of the journey, kind of learning that you do get wrecked and that all crypto is going to zero, and that really, if you're going to understand that side of it, there's only a handful of legitimate projects. And the way that I would describe the difference between Bitcoin and crypto is that Bitcoin is a decentralized protocol that's a peer-to-peer cash that anybody can participate in, and it's completely open source. Cryptos are more VC companies at best, and they're technologies that are largely experimental. And so out of the millions and millions of cryptos that there are, it's almost impossible to identify which ones are going to be successful. And the same top 10 cryptos last year are not going to be the same 10 next year, and so forth. So therefore, with Bitcoin being 60% of the market cap and everything bleeding into Bitcoin, eventually it just made sense to understand the altcoin, meme coin world. But as you go on that journey, the more you learn, you just realize that it's only Bitcoin that makes sense.
Yeah, that's one impression that I got from you when I met you in person in Abu Dhabi, because you make it a very clear division between crypto and Bitcoin basically it's not crypto. And I find it like really interesting. And everyone has to go through that transition. Like we have to buy some shitcoin in order to be a full Bitcoiner. And trust me, I'm still transitioning and I'm getting there and I'm joining in the journey. So, my question for you next is that since your background focus on accounting and finance, do you think it actually helped you to understand the taxation part of things when it comes to Bitcoin or like financial inclusion to the public?
Yeah, without a doubt. I think every single job that I had, even being a secretary to start with, even all the rubbish jobs that I had early on, I think everything helped me understand money, budgets, finance. Accountancy really helped me understand the nuances of what I was dealing with. And then moving into IT really helped me understand a little bit of code and the development aspect of it and why systems are built, how systems are built, how a good system is built, for example. So I think that I think a lot of the problem that we have now is that people don't understand money. They don't understand what money is, and they don't really understand finance. And when you think that Bitcoin brings together both of those worlds, I think it is important to have a working knowledge of both.
And I was going through your journey, and right now you are the CEO and co-founder of Bitcoin Policy UK. And you told me that was the 1 year anniversary when I met you in person. So congratulations to you. I wonder, like, how do your early career help shape Bitcoin Policy UK's mission as well? And because since you work with multiple partners from NT.BTC to UK policymakers, like, how have these relationships influenced the way you approach Bitcoin advocacy?
That's a really good question. It- Difficult to answer because everybody's different and everybody needs a different approach. So I think that having a good knowledge of business and how businesses work, including taxation and understanding all the nuances of the finance world, I think brings it all together and means that you can be a bridge because everybody has different skill sets and they have all come from different walks of life with um different career paths, and so everybody is almost converging at this point of Bitcoin and trying to be able to boil it down and explain, you know, why Bitcoin's important, why we do what we do, and why it is the UK needs Bitcoin. So I put out a post with all the amazing things that we've achieved over the past year. So we are a volunteer organization. Bitcoin doesn't have a CEO. A lot of these crypto companies, well, they all do. So, when you think about the structure of how crypto works, you can issue your own tokens, you can print your own tokens, and you can basically print your own money. And then that money can feed into lobby groups, and then it can buy you influence within governments. So that's what we're up against. We're up against crypto companies that can basically print their own money. We are an advocacy group of people that really believe in the power of Bitcoin, the technology, and what it can do for people, especially as a freedom money. So, you know, being able to approach things without money, keep your integrity, and bring it to people so they can actually understand why this is important and why it's needed. So, a post that I did recently, I said the UK needs Bitcoin. Bitcoin doesn't need the UK. So, everything that I'm doing at the moment is because I see the potential for the innovation and how it can help people. But really, Bitcoin will do its thing. Bitcoin doesn't need anyone. People need Bitcoin, and that's the message that we need to get across. And it's a completely different approach to how policy is formed. It's a pay to play system, unfortunately. I mean, I'm kind of don't even really think we live in a proper democracy when you see how the influence is bought and paid for. So coming up against that, trying to educate people properly, especially when the mainstream media has completely demonized Bitcoin in so many different ways. A lot of our MPs are a victim to this poor journalism that they've been subjected to. They still think that Bitcoin is bad for the environment. They think that it's a Ponzi scheme and that criminals use it. So, unwinding that damage, first and foremost, is absolutely paramount. And I know it sounds the word gets overused all the time and it means a lot of different things to different people, but education is absolutely vital because we have to unwind that damage. We have to teach them what's possible. And the UK has a really amazing history in financial services and computer science. We're the third largest sovereign holder of Bitcoin. We should really be all over this, but somehow we're not.
Yeah, I mean, I agree with you completely. And one thing you mentioned, and I love about Bitcoin, is Bitcoin's role in human rights and self-sovereignty. But since that you're stressing that so much, I wonder if there's like a personal story, a personal experience that you feel like this particularly nature of Bitcoin, like you find it so attractive. Like, is there a specific reason or story you could share to us?
No, there's nothing really. I just think I've never really been a fan of authority and I don't really like being told what to do. That's just something that's always been with me throughout my entire childhood. I wasn't particularly liked by teachers at school. I was always getting into trouble because I needed to have the reasons for things. I couldn't just be told to do something and then expected to comply. That just didn't sit with me. If they expect me to follow a rule or do something, then it has to make sense. Otherwise, I can't do it. So I think that it's got nothing to do really with any major experience. It's just an inbuilt need to be free and to not be told what to do and to be a part of a functioning society, but on my terms. I've never really liked how society expects you to conform without giving you the reasons. It feels like control for no good reason, and so that's what I really want to fight against. And I think no, there was an experience, you're absolutely right, but it wasn't to do with me. It was actually when I was 14 years old. I went to Malawi, which is a country in Africa. My dad was doing a consultancy out there and helping them with their computer systems and not their computers, sorry, their communication systems. And he said, come out, it will be a really good experience. And I saw firsthand how governments did not look after their people. I saw how rich the governments were, how flashy the cars were, how flashy the people were going into the government buildings. And then I saw people outside, destitute, dying, um, you know, disabled, suffering. And I think it really hit me at the age of 14 that this could actually happen, and it was happening on the planet in my lifetime. It wasn't just a hypothetical. And so when you actually see the disparity between governments and their people, and you see how they don't look after them, all of a sudden you think, hang on a second, like this can't just be unique to this country. And the Human Rights Foundation has said that 72% of the world are under some sort of authoritarian regime. So that includes countries like India that are technically a democracy, but actually function more like a dictatorship. So I think that although it wasn't a personal experience, that's something that affected me, it was something that I saw at a very young age that I think stayed with me and almost got fused into every single cell of my body. And I think it was the injustice of it, because I don't like complying for no reason. I don't like following rules for no reason. And I also don't like injustice and unfairness. And I think all of those things have come together, which is why I talk so much about the human rights and the freedom aspect of Bitcoin, because really self-custody, and that is what makes Bitcoin special. The fact that you can have an asset that you can bring into your own self-custody and look after it, that doesn't require a third party, I think is so powerful, that I want people to know that it exists, that it's there, and that it's a grassroots movement for the 8 billion people on the planet.
Yeah, thank you so much for sharing that story. And especially when you have witnessed that firsthand at such a young age, then I'm sure that changed how you view Bitcoin at even when you just entered the space. Because like you entered the Bitcoin space for a few years. Like, do you think like how has that your understanding of Bitcoin evolved beyond in just an investment? Because like people are getting into Bitcoin trying to get that financial basically return. How do you basically evolve from that to telling people, oh, it's actually a lot bigger than it's just like your number going up on the balance sheet, I mean, on the portfolio?
So I think number go up is very important. The store of value aspect of it is vital for Bitcoin's adoption. Most people come into the space because they're interested in the number go up aspect. I know that that's exactly why I came in. It was the investment part that fascinated me. I thought, what is this new asset? Why do people not take it seriously? What is it? And I actually remember being at work in my old fiat mining job, and it was my boss that was laughed at one of my colleagues who said that they'd bought some Bitcoin. And I remember thinking, oh, why has he dismissed that? Like, why is that funny? And I think it was that made me think more about what it is, why some people love it, why some people hate it, why there's a strong feeling behind it. I think store of value is obviously very, very important, but medium of exchange is much more important. It's a peer-to-peer cash, as written in the white paper. So we have to make sure that we find ways of people being able to use it, because it's a neutral, decentralized global currency. How can that not change the world? Once you realize that, and you realize that debanking is a thing, that so many people are kept out of the financial system, you only have to look at what's going on with Venezuela and what happened with Russia to see that you can have a global superpower that can use sanctions to, you know, cut off entire nations, just two presidents having a fight with each other, and then their people end up being affected by it. You know, we need a neutral global money, and once people understand the power of that, I think it's a complete game changer. If they come for number go up, that's important too, but you know that they come for the money and they stay for the revolution.
Yes, I love that last statement. They come from money, but stay for the revolution. And especially when you brought up examples like all these countries' president having a fight on, I don't know, on Twitter, or maybe your personal experience in Africa. So I wonder if there is something you've witnessed in the UK that you think the UK is probably heading to a wrong direction. That's why we need Bitcoin so much, and that's why you're advocating Bitcoin and doing all these like amazing work and hosting events in the UK.
So we when Bitcoin where do I start? So 1971, everybody knows that we got taken off the gold standard by Nixon, and that was when money was cut from energy. So it's really important that money has a direct connection to energy, because any money that has no cost to produce will always warp society. And that's exactly what we're seeing right now. We're seeing um, warped money. It's not sound and it's not connected to anything. So when money was connected to the gold standard, the reason why that was important is because, say it took 80 tons of rock to create an ounce of gold, the amount of time and money that would go into producing that gold would stay. And so when I gave that gold to you, you know that that time and money would be stored. You could keep that. It wouldn't be, you know, it would be locked in almost, and then you can exchange your time and money in a way that with something that holds its value. If money can get just printed out of thin air, or through debt creation, then you're swapping your time and money for something that has no cost to produce. So that's why we've seen a huge divide between the cost of living and wages, where the cost of living has risen probably between 12 and 15 times since the 70s, if not more, whereas the wages have only risen about 5 times from the latest figures that I've seen, and that was probably last year. So that's probably changed considerably, because we've been going through a period of, you know, quite high inflation globally. So when you think that money is no longer connected to energy, we don't have a sound money standard. Our economics, the economics that are taught in universities is Keynesian economics, which I think is just one theory, not necessarily the way that we should operate. And so I think that once you understand money, you understand energy, you understand the connection, and you understand how that feeds into people's lives and how they want to swap their time, which is finite, and their energy, which is finite, for something that is going to hold its value. You shouldn't be swapping your time and energy for something that's going to be worth less next year. So if we can introduce the more sound money principles into our economy, and we can understand that people can start earning something that is actually going to hold its value, that's going to be a game changer. The UK is definitely on the back foot, without a doubt. And like I said earlier, you know, Bitcoin doesn't need the UK, but the UK definitely needs Bitcoin.
Yeah, I kind of want to build on that, especially your last statement. Like UK definitely need Bitcoin. Like, is there a specific reason, any news or example that you could offer our viewers? Like, why do you think UK desperately need Bitcoin? Like, Bitcoin, of course, is they have the amazing foundation. You brought up the gold standard. That was a really good example. So I think not just the UK, but everyone around the world, like we need to know about Bitcoin, like because Bitcoin is giving freedom to small people, to citizens like you and me. But like, is there a specific thing or UK that is doing? Because from what I read on the news on the internet, is that UK is trying to be a digital asset hub. Do you think that statement is true or not?
I think you can say words. It doesn't mean that they mean anything. So I actually wrote an article about this at the beginning of 2024 because we had a prime minister called Rishi Sunak who made that exact statement that he wanted the UK to be a crypto hub. That was the same week that they made it the FCA, our Financial Conduct Authority, made it very difficult for people to buy and sell crypto or Bitcoin. It made the on-off ramps harder. They put in a cooling off period. Quizzes that nobody could pass, even if you did know what you were talking about. So that was the same week that the US actually approved a Bitcoin spot ETF. So the same week that the US are opening up to Bitcoin and BlackRock are giving its stamp of approval, the UK is saying it wants to be a crypto hub and basically shutting things down and making it even harder. So you can say one thing, but the actions didn't really marry up. And I've got lots of examples of this where our government are completely deluded. So, for example, we went to the Labour Party conference in September, and that was around about the time that Keir Starmer wanted to introduce digital IDs, which, you know, there was a massive petition, probably one of the largest petitions since Brexit, and 1,000 signatures were going on this petition a minute against digital IDs. It wasn't on their manifesto. All of a sudden, it just came out of nowhere. And when you talk about things that you want to do, and I then on the way back from that conference, I sat opposite somebody from the Tony Blair Institute who was implementing digital IDs and was actually speaking at the Labour Party conference. And one thing that he mentioned is that the UK wanted to be an AI superpower, just going off on a slight tangent about things that they say that they have absolutely no ability or plan for doing. So he was saying how digital IDs are one thing, but being an AI superpower is another thing. And this guy from the Tony Blair Institute was talking about both of these subjects. Now, the Tony Blair Institute is so in bed with the government, it's ridiculous. But to actually, I said, but how could you become an AI superpower? We've got the highest energy prices in the world. There's no way that we can do it. We've got wind farms that are intermittent. We can't control our renewables. We're having to pay £1 billion a year in curtailment costs to stop producing electricity. And all prosperous societies are prosperous and with a direct link to energy. And if we've got a problem with energy, how on earth are you going to make the UK an AI superpower? And his response was, it's aspirational. And in that moment, I was completely dumbfounded because I realized quite naively that they can say anything, but it doesn't mean that they've got a plan, and it doesn't mean that they're going to implement it, and it definitely doesn't mean it's going to happen. It's just words.
Yeah, I mean, coming as a foreigner, because I live in Hong Kong, but listening to a local British people saying this is actually very heartbroken. And when it comes to the UK, I spent a good few years. I was staying in the UK for 7 years, and I understand a little bit of that culture. But like looking at the news, looking at everything on the internet, as you mentioned, the energy cost is going up. You guys have one of the highest energy costs around the whole world, and not just UK, but Europe is experiencing the same thing. So, like, where does that leave UK to? Like, AI maybe it could be lagging behind US a little bit, and it ties deeply with the energy cost. Like, do you think having maybe something like a Bitcoin strategic reserve that would save UK and probably push UK to a better direction?
I don't know. I'm not calling for a Bitcoin strategic reserve. I'm asking our government to do, or we at Bitcoin Policy UK are asking our government to do a feasibility study. So that's not necessarily saying that Bitcoin fixes all of these things. It's us asking them to actually look into the potential. So if they looked into it and they decided that a strategic Bitcoin reserve was not for them, that's fine, but they at least need to do their research. I'm not telling them what to do. I'm just telling them that they need to look into it. And as the third largest sovereign holder of Bitcoin, they have a responsibility to do that. Unfortunately, we have 61,250 Bitcoin. Our government does. It was seized from a Chinese Ponzi scheme. So what happened was the criminals then put that fiat money into Bitcoin, and the Bitcoin rose in value. And we've been going through the court systems to try. I think the Chinese want it back, and the UK saying no, we've seized it, and they seized it from Coinbase, which is another good reason why criminals don't use Bitcoin, is because it can end up in the hands of governments if you don't know what you're doing. By the way, you can't have your Bitcoin seized if you've got it in self-custody. And that's not from a criminal point of view, that's from a third party. You don't want your government taking your Bitcoin either. And if you ever want to flee a situation where you want to take your wealth with you, it's one of the few things that you can take. Well, it's the only thing that you can take. You just have to remember a 12-word seed phrase, which is why I advocate for the self-custody and the freedom aspect of it. But going back to the UK's Bitcoin, so now that Bitcoin has appreciated in value from the fiat value that they put into it, we've now got a surplus between making the victims of the Ponzi scheme whole, paying them back in the fiat value, and now we've got this uplift in Bitcoin that now the UK government will have to figure out what to do with it. So now the court systems have said that it is theirs. They will obviously make the victims whole. By the time all of that finishes, I've got a horrible feeling that we're going to be in the depths of the bear market, and that we're going to have to force sell it through the proceeds of Crime Act, and that we are going to do what Germany did, and we're going to sell our Bitcoin. Now, all we need to do is change that act so that we can look at this strategically and differently from the other seized assets. It's so big and it's so fundamental to the system now that they can't just ignore it. And so we are not telling them what to do. We are saying, look into it, study it, do a feasibility study on it, and then decide what to do. But don't get forced into an action where you're forced to sell at the bottom of a bear market, because this is an asset that will have strategic importance in the future, whether it be from a financial point of view or even a hash rate point of view. But there's no way I'm going to be able to explain why hash rate's going to be important to a government who doesn't even see the benefits, even from a simplistic demand response energy grid point of view. There are so many aspects to Bitcoin that can help our government, and they need to look into it. Whatever that is, whatever the outcome is, we're not dictating. We're just saying, please, for goodness sake, study it.
Yes, I mean, I love that a lot. Like, Britain used to be a really strong country, and like you mentioned, UK is actually the third country that hold most of the Bitcoin on the balance sheet. Like, the first one is the US, and the second is China. And UK is sitting at number 3, and is sitting should be in a really good position. So, to speaking of that, to build on that, like I noticed like the 2024 Property Act recognized Bitcoin as property. Like, how big of a win is this? And speaking of the local sentiment in the UK, like, how many of, like, basically what's the rough percentage wise of people actually agree with maybe we could keep that Bitcoin instead of selling that? So what is the local sentiment in the UK looking like?
I'll take the sentiment. Remind me of those two questions, but I'll answer the sentiment one first. I don't know, because I don't think many people take Bitcoin seriously at all, because they obviously still believe in mainstream media and the bullshit that comes out of that. So it's very difficult to know, because we live in a bubble in the Bitcoin world. We all think it's the be all and end all of everything, and then you go out into the street and you realize nobody knows about it, nobody cares about it. So the one thing that you literally spend your whole life obsessing over, no one gives a shit. So it's really difficult to answer that. But going back to the Bitcoin becoming a property, that was huge, and that was something that we have been campaigning for. So just to give you some background, there were in law two types of property. The first one were physical things like houses. The second one was a more intangible, like stocks and debt. And so what this did was create a third type of property called data objects, which it's not just Bitcoin that gets recognized as a property, it's anything that has scarcity on the internet. So prior to Bitcoin, I guess, anything on the internet could be replicated. There was no scarcity. It would have been pointless, especially when you take a JPEG or a picture or whatever. I mean, I'm not a fan of NFTs, but you could copy that picture and you could send it out, but an NFT created a form of scarcity. The same way that Bitcoin has created a form of scarcity is something that had never existed on the internet before. So now having data objects as a third type of property, it recognizes that innovation in the way that it should be, and it was absolutely huge.
Yes, I absolutely love that. And when it comes to your roles, because like you are also a host, so you're an educator on Roxom TV as well. So I wonder if we could like link those things together. Like, how does like having a platform like podcasts or like TV shows, how could you like help to highlight Bitcoin policy and media narratives or global trends at all?
So it's really good to have the opportunity to talk about Bitcoin, its innovation, and why it's special. So Brandolini's law is the asymmetry of bullshit. So it takes 10 times the magnitude of energy to refute bullshit than to create the bullshit in the first place. And that's what we're up against at the moment. And that's why I say that education is so important, because I have an opportunity to write. I also write for Forbes. I write only about Bitcoin or CBDCs sometimes, but it gives me an opportunity to actually put across all the amazing things that Bitcoin does that the mainstream media loses. So not only do I have a platform through Forbes where I'm able to reach non-Bitcoiners, which in my opinion is actually a lot more important in some respects, but also speak on Roxom about the work and the learning that I have done to try and teach people everything that I know about Bitcoin so they can make good choices. I'm not here to tell people what to do or tell people what to think. I want people to have the right information so they can make good choices for themselves.
Amazing, Susie. So, if our viewers want to know more about your perspectives or basically learn more about Bitcoin policy in the UK, where's the best way to reach out to you?
So we're on all the main platforms. Just look up Bitcoin Policy UK on Twitter. We're also on Nostr, LinkedIn, and if you Google it, the website will come up and you can have a look at all of our work. All of our policy documents are on there, our mining documents, our mission statement, everything that you can see, what we stand for, who we partner with. Yeah, just Google us and you'll find it.
Amazing, Susie. Thank you so much for walking us through the latest on Bitcoin policy in the UK and great insights as always. There's a lot developing in the space, so we will continue tracking it right here on Roxom TV. So do stay with us. We've got more shows coming up, and from all of us here, happy Christmas.